Good morning. You're watching Businessworld Live. I'm Danny Laurel.
And I'm Jess De Los Santos. Here are the biggest stories to kickstart this trading day, Monday. Analysts forecast economic growth to have been moderated in the last quarter of 2021.
Local stocks are seen to climb ahead of the release of the GDP data that is later this week.
Researchers at Okta see a downward trajectory in the reproduction rate of COVID-19 in Metro Manila. Despite this, the health department says it's too early for the capital to ease to alert level 2.
And the government assures the public that there will be no power interruptions during the election season. We begin our broadcast with the country's GDP expected to have maintained its growth in the fourth quarter of 2021.
However, economists forecast that growth may have slowed down a bit quarter on quarter, even as relaxed restrictions spurred more economic activity. A Businessworld poll of 18 economists yielded a GDP growth median estimate of 6.5% for the last 3 months of 2021. This is a bit slower than the 7.1% uptick in the third quarter and the 12% growth logged in the second quarter. But this forecast is a reversal of the 8.3% contraction recorded in the October to December period in 2020. For full year 2021, economists expect GDP growth to have settled at 5.3%, well within the government's target of 5 to 5.5%. If realized, this will mark a turnaround from the record 9.6% full-year drop in 2020. Economists attributed GDP growth to the further easing of restrictions and the decline of COVID-19 infections in the last 3 months of 2021. They said more businesses have increased operational capacity and consumer spending saw an uptick amid the holiday season. GDP figures will be released on Thursday, January 27th. Now on to some COVID-19 updates. The Okta Research Group sees infections further dropping in Metro Manila, with the reproduction number sliding to 1.03 on Sunday from the 2.60 recorded a week ago. However, Okta Research fellow Professor Guido David warns the public not to be complacent as the capital remains at high risk. The health department says it's also too early to declare a shift to the more relaxed alert level 2 in NCR because of a possible underreporting of cases. Yesterday, the DOH recorded almost 30,000 new cases in the country, bringing the total to more than 3.4 million. 7.5% of these infections are still active. Meanwhile, retailers remain optimistic for the industry's recovery this year, despite the threats brought about by the Omicron-driven surge. The Philippine Retailers Association is expecting sales projections to remain positive as long as the strictest form of lockdown is not implemented to curb infections driven by new variants. Happy Monday, Dan. Here we are on the last week of January, finally, and after a rocky start to 2022, are we ready to get back on track?
Well, that's what analysts are hoping for, Jess, at least for this week. So they are saying stocks may climb ahead of that GDP data, which we are expecting. There's also the Fed review in the US that's going to be tomorrow until Wednesday. So for the GDP, that's fourth quarter, that's going to be on Thursday. And of course, lowering of COVID cases. Recall last week, you can see that on my terminal here. We were already up week on week. We closed just shy of 7,300 there. Tina Ulang of First Metro Investments is saying that mining and oil, consumer discretionary, financials, these are the sectoral indices that are seen to move in the next few days. Let's take a quick peek at our movers here. You can see Wilcon Depot leading the charge here, up by 0.9%, followed by Bloomberry and Converge. You've also got Ayala Land in the leaderboard. On the downtrend, you've got JG Summit losing here, down by 2 3/10 of a percent. Now let's check in on some conglomerates today. Speaking of the Ayala Group, take a look at AC here. That's down by 10 pesos, down by 1.15%. This, as they've said that they will beef up their capital this year, or capital spending rather, to 297 billion pesos. That's from 230 billion pesos in 2021. This is according to their president and CEO, Fernando Zobel. In an interview with Bloomberg TV, he said that Ayala Land will get 92 billion pesos, Globe 87 billion pesos, and ASEN 61 billion pesos. Zobel said that while 2021 was tough, there are very good signs of recovery in the fourth quarter of last year. He said remittances are up, unemployment is down, foreign inflows and imports are increasing. And let's take a look at Ayala Land. Recall that last week, Ayala Land announced, or Ayala rather, announced that the holding company AC and Mermac, which is of course the holding company of the Zobel family, will transfer 5 of their prime property developments to Ali. That's worth 17.5 billion pesos in exchange for more than 311 million primary common shares. It's around 55 pesos and 80 centavos each. Now, what do they own? AC owns, a host of properties, particularly 50% ownership in Ayala Hotels. They own the Manila Peninsula property. They will be giving this or transferring it for a share swap with Ayala Land, and this will increase their ownership to 47.2% in Ali. And another one that I want to be watching out for here, that is RRHI, Jess, that's up 35 centavos. Another one doing buyouts, that is the Gokongwei Group. So Nikkei Asia has reported they will buy out its partner in convenience store chain Mini Stop Philippines. They will acquire the remaining 40% stake, which would now give RRHI 100% ownership in the joint venture. RRHI trading at 58 pesos this morning. Now, while the pandemic continues to disrupt the global supply chain, logistics giant Toll Group is still on expansion mode, even opening the doors to a local office here in the Philippines.
Why make the move in such uncertain times? Let's find out from Rajiv Sood, Senior Vice President of Toll Group Forwarding for ASEAN and India. We speak to him straight from Singapore. Good morning, Rajiv.
Good morning, everybody.
All right, first, Rajiv, why set up shop in the Philippines at a time when the pandemic continues to disrupt the supply chain?
Well, thanks, Chad. Let's take a step back and see where today's market is, right? It's a market which we never thought we'll end up with. And after the last 2 years that we have seen during this pandemic period, we have seen disruptions in supply chain throughout. Customers have been kind of looking at options, solutions, literally banging doors of the service providers, trying to see where they can get a solution. We at Toll Group are quite bullish about Philippines. We feel there is a lot of potential, and especially around where customers realized that there is a big risk, especially relying on that China strategy, where everybody was looking at suppliers in China. And then when the pandemic hit us, it was really difficult for the customers, especially in Europe and US, catering to their orders out of China. So they looked at China plus one strategy. They looked at diversifying their supply chain, building more resilience in their business by looking for more suppliers in markets like Southeast Asia, Thailand, Indonesia, Vietnam, and Philippines is no exception here. So we see a big growth, especially in our key verticals around retail, industrial, technology, and also automotive, right? So we feel that there's a market to be captured. Not only this, we are also quite bullish on Philippines exports. We're looking at about $49 billion of exports via Philippine Export Development Plan in the year from 2022 to 2027. And that will really boost a lot of opportunities for customers, especially in the Western world, who are looking at these suppliers in Southeast Asia, Philippines, to meet their demands. Last but not the least, I also feel that Philippines has really done well in terms of trade facilitation. They've made it easier for companies like us to come in with little restrictions and start our own operations. And as per the recent United Nations survey, Philippines ranked third in that survey. So I think Toll Group, around its Asia growth strategy, is perfectly poised and can definitely leverage from some of these key factors that I just mentioned.
Now, Rajiv, you mentioned so much potential here for the Philippines on the global supply chain level, but we're still fraught with challenges here. What's your outlook on the sector, especially on global supply chain pressures? Do you expect some easing anytime soon, or will key challenges remain?
Well, I wish I had a crystal ball here to give you a firm answer on this, but I can definitely share my experiences and the way I see things. This year is going to be tough. We'll continue to see the disruptions in FY or calendar year 22, and it might as well go into calendar year 23. Disruptions because of labor and equipment shortage, capacity crunch, schedule disruptions because of COVID has really made matters worse. But this is where companies like ours come into play, where we are not relying on the local network alone. Of course, we provide the local expertise and the network, along with our global reach in 26 countries, with presence in Asia Pacific, Middle East, North America, Europe. We can give those end-to-end supply chain solutions to our customers, and it can be around hybrid solutions, be around pure ocean freight, air freight solutions. And what we have seen over the past couple of years, a lot of our customers have been asking for these solutions. So we feel that, of course, the situation will be tough, but customers in Philippines would need integrated supply chain service providers with global network like ours to solve some of their supply chain constraints.
Okay, Rajiv, following up on that, what can be done differently now? You're entering right now in the middle of this pandemic. How are you going to change, the structure of supply chain for firms to be able to better navigate the bottlenecks?
So I think first and foremost is, like I said, opening an office in Philippines brings us closer to the customers. So this is purely for our local customers in Philippines who are looking for these solutions. So we connect with them, we hear them out, and we build that, or we deepen our relationships with them. We have been in Philippines since 2007, so we very well know the market. But to say that, yes, we're going to change the whole landscape of supply chain in the next few months, of course, that's not possible. It's a step-by-step approach where you're looking at various things around digitalization, providing that visibility to our customers where they say, okay, well, we know where the market is. We know there is a challenge around moving a box from point A to point B. What is the solution you can provide us? And that's what I said, what I alluded to, was giving them those solutions around, especially the hybrid landscape, right? Where you're looking at moving a box, let's say, from Manila into Dubai and then air freighting it to Europe and not looking at just a box directly from Manila into Europe. So those are the solutions which customers are looking at. So these are some of the innovations that we are trying to bring into our product space, which will definitely help them to look to gain their insights on and also benefit in their own supply chain needs.
All right.
I just have another follow-up question, Jess, if you allow me. Are you happy, Rajiv, with the ease of doing business in the Philippines, particularly when it comes to new policies on trade?
As I said, of course, for us, it's been like 6 months. We launched our office on 17th of January in Metro Manila. And it took us almost 6 months to do the homework, build a team of people. And I'll be very honest with you, compared to some of the other countries that we have through a similar exercise, Philippines was relatively easy. And that's why I said, I think the survey that was conducted was spot on. Philippines has really done well in terms of trade facilitation.
Okay, now Rajiv, of course, talking about trade, one of the important, at least key movements that we've had this year was the passage of the RCEP, or the Regional Comprehensive Economic Program. But does it worry you that the Philippines has yet to ratify its membership to RCEP, as well as other countries here in Southeast Asia?
Yeah, so for me, RCEP is an important move in this whole supply chain arena, especially in Southeast Asia. It will definitely, the countries part of it will definitely benefit out of it. But you know, when I look at Philippines, and I mean, they, you know, for them, I think the local government has done enough, and we at Toll Group definitely see a lot of opportunity. So from our perspective in this market, we are quite bullish, as I said, and let's not forget, you know, we look at Toll Group, you know, we have a strong Australian heritage, and we had 130 years of existence, and now we are part of we are part of Japan Post, and we are really thankful for the we are really fortunate enough for the strong support, right? So we see a big market of Japanese customers in Philippines because trade between Japan and Philippines is quite big. We have got a lot of existing customers in Japan, you know, where Japan Post has a good relationship where we can leverage on. So RCEP or not, I still feel that Philippines will do well, and when it comes to Toll Group, we'll definitely benefit out of it.
Rajiv, you're anticipating double-digit growth over the next 5 years here. Tell us, how has the logistics space grown during the pandemic compared to pre-pandemic, and what's your outlook moving forward?
So supply chain disruptions brings opportunity. So from our perspective, when you are working on providing innovative solution, you know, there is a lot of thought behind it. Yeah, and there is a tangible value attached to it. So for us, it is the way we see it. As I mentioned earlier, it's the opportunities that we have through our existing customers within the business, where they have been literally asking us for opportunities out of Philippines. We see that will really add to the overall numbers over the coming years. And also new customers. So the response, we have received an overwhelming response over the last weeks since we have opened up, where people are reaching out to us. And as I said, it's more around connecting with them locally. It's more around, you know, giving them that global reach, which you know, they can't have through local service providers. Now, the future looks bright. As I say, with any problems, there's always an opportunity. And we are well poised to cash in on this opportunity. I think Toll Group, with a strategy around Asia growth and then expanding our footprint here in Philippines, will really help us to achieve our targets over the next 5 years.
All right.
Okay, so disruption and opportunity there. Thank you so much, Rajiv Suod, Senior Vice President of Toll Global Forwarding for ASEAN and India.
Thank you.
Now, after the break, the Bangko Sentral is again urging Congress to pass amendments to the bank secrecy law.
More of that and other stories when Business World Live returns. Stay with us.
You're still watching Business World Live here on One News. I'm Jess De Los Santos.
And I'm Danny Laurel. The Bangko Sentral is pressing Congress to approve several key reform measures, including one that would amend the bank secrecy law.
The BSP supports the Bank Deposit Secrecy Bill, saying this would equip it with necessary tools to prove fraud, irregularities, and unlawful activity. The Bicameral Conference Committee is also being pressed to adopt the most liberal provisions of a measure amending the Public Service Act. This includes provisions allowing fully foreign-owned companies to hold operations and maintenance concessions for airports and seaports. Business groups also want foreign ownership restrictions lifted for tollways, expressways, air carriers, public transport, and telecommunications. They said liberalizing these industries will improve the country's reputation as an economy that welcomes foreign investment. Lawmakers are under pressure to pass the Duterte administration's priority bills before going on break on February 4 for the election campaign. Here are other headlines we're keeping our eyes on. The national government made debt service payments in November 2021 amounting to 81.2 billion pesos, triple the total from a year ago. Amortization payments accounted for over 61% of the total debt service bill, increasing by more than 7 times to 50 billion pesos. Principal payments to foreign creditors amounted to 6.9 billion pesos, while those to domestic lenders totaled 43 billion pesos. Interest payments are meanwhile up 55.8% to 31 billion pesos. Interest paid on domestic debt is at 27.7 billion pesos, up nearly 74% year on year.
The International Monetary Fund is advising the Bangko Sentral to be prepared to act against more entrenched inflation. That's as the BSP is likely to remain accommodative this year. That's on top of a possible capital outflow in case of a faster tightening by the US Fed. IMF representative to the Philippines, Ragnar Gudmundsson, explained that maintaining a flexible exchange rate provides effective first-line defense against external shocks. Recall that BSP Governor Ben Diokno earlier said he would want to see 4 to 6 quarters of steady economic growth before making any policy adjustments.
The government says it has received assurances on Indonesia's intention to resume coal exports once Jakarta allocates sufficient supply for its domestic needs. Trade Secretary Mon Lopez says the assurances were delivered by Indonesian Coordinating Minister for Economic Affairs, Erlangga Hartarto. Indonesia imposed a ban on coal exports after its state power utility announced low stockpiles of coal at Indonesian power plants.
And the Trade Department says the supply of paracetamol in Metro Manila has finally stabilized. Trade Secretary Mon Lopez said that purchase limits on paracetamol helped in normalizing the supply and demand situation. Lopez adds that manufacturers were able to catch up in replenishing as demand was not artificially bloated.
Some analysts believe presidential aspirant Bongbong Marcos's refusal to join GMA7's presidential survey is just a strategy to keep his lead in the surveys. Camille Samonte with the rest of the story.
The hashtag MarcosDuwag trended on social media over the weekend. This was after Bongbong Marcos skipped a presidential interview by GMA7 aired on Saturday. Vice President Leni Robredo, Manila Mayor Isko Moreno, and Senators Panfilo Lacson and Manny Pacquiao accepted the invitation. Marcos, however, declined to take part. The reason, according to his spokesman Vic Rodriguez, it was due to veteran journalist Jessica Soho's alleged bias against the Marcoses. Rodriguez also insisted that Marcos' duty is to the Filipino people and not to a particular TV show or program host. GMA7 meanwhile was quick to defend Soho from the allegations. The network noted that in particular episode, Soho boldly asked the presidential aspirants questions that needed to be asked. Lacson also defended Soho, citing his own interview with the journalist. Although not required, debates and other similar events that scrutinize candidates are staples of the election season. For some political analysts, Marcos' absence might be a political strategy.
That's a possible scenario. Sinadya nila yan para pag-usapan. Sinadya nila yan para i-stake ay yung masasabihin ng mga kalaban.
For Professor Ed Tayao, it's also possible that BBM's camp is already confident as he continues to lead presidential surveys. Tayao also cite Marcos' previous interview experience with Soho.
Sa pagkakatanda ko, sa mga nakita ko sa mga newsfeed, meron na kasing experience ng interview before with Miss Jessica, no? And that could have been one of the factors, if not the most important factor, for them to reconsider being part of the interview.
Both Tayao and Contreras pointed out that the public should focus on the candidates who showed up instead.
Tanungin natin, ano ba yung sinabi nilang mali doon, ano yung tama? We should focus more on that rather than the absence of someone who didn't want to be there.
Nasa sa atin lang yung paraan at pagkakataon ng pagtimbang kung sino sa mga kandidato ang dapat na manalo.
For News 5, Camille Samonte, We Are One News.
Meanwhile, the Energy Regulatory Commission, or ERC, is expecting no power interruptions during the campaign, election, and canvassing period. This as the NGCP enters into firm contracts for power reserves, which are pending approval by the ERC. ERC says it is monitoring NGCP's compliance with the DOE circulars on ancillary services, the regulator's term for reserves that may be tapped should baseload supply run low. And that's a first look into the business day this Monday, January 24, 2022. I'm Jess De Los Santos.
And I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.